Investing has never, will never, and is not ever a team sport. Softbank, in hindsight, made one critical error, and only one. And everything else was sort of a fait accompli with that one error, which is that in their fund documents, they made this a 10-year fund. Now, let me explain. Why is that an error? That is the status quo for all these funds. And the more nuanced part of that decision to make it a 10-year fund is that your investment period is only 5 years. So you're only allowed to put the money in for the first 5. And then you have to basically manage the portfolio because there's an expectation that you raise a new fund. So if all of a sudden you have $100 billion in a 5-year investing life, the math says, oh my gosh, okay, well, I need to put 20 billion out per year. And then you try to look for, I don't know, let's say 50 companies a year. Well, the mean check size now all of a sudden balloons to 400 million. That was the error. You see afterwards, the very, very smart private equity folks who saw that that was the error fixed it. So Blackstone, Silver Lake, when they came on the heels of Softbank, what they did was they raised funds with a 15 and 20-year life. And what that allows them to do, and what it would have allowed Masa to do in this situation, was just slow it way, way down.
Pace yourself.
And do fewer deals with much more capital, and then be patient and say, I'm going to have a 10-year investing life. And I think that would have saved them. And they would have looked incredible right now because they would be the kingmaker in a moment where there is no money flowing into venture and early stage tech. So in my opinion, I think it was just that it was such an ambitious feat that when it came time to execute, whoever was really in charge of those details kind of fucked it up. And they should have realized the math didn't work for a 5-year fund life. And they should have made it a 10-year fund life or 10-year investment life, which would have put a 20-year fund life on the thing. And I think they would have been fine. No, and it forces you to have a team that is so broad and large and diffuse. That is not this game. This is another thing I would love to, for us to talk about.
Correct.
Investing has never, will never, and is not ever a team sport. Okay?
Explain.
It is like basketball. You can be on a team, but you are Steph Curry or you are not Steph Curry. You are Draymond Green or you're not Draymond Green. You are LeBron James or you're not. There are J.R. Smiths on a team. There are Tristan Thompsons on a team. And you come together and the team can win a championship, but there are these exceptional individuals.
Yes.
And the firms that have really done well consistently over decades embrace that philosophy. Benchmark, Sequoia, these guys don't try to create this team-oriented, glad-handing approach. But they also don't allow the teams to get so diffused that there's 500 people running around ripping money in, because you basically then return the beta of the market. And if the market doesn't look good in that vintage, then all of your returns look pretty crap. A year ago, Sequoia just put out an entire document and a roadmap for becoming an Evergreen Fund. And I read that document. And what I thought to myself is, all of this looks incredible unless the market goes down.
And then the market went down.
And then the market went way, way down. Why? Because their whole thesis is we're going to park and hold money. Well, okay. But they also allowed a revolving liquidity mechanism for their LPs.
Every year.
You're a cancer foundation and you want to fund cancer research and you expect Sequoia to give you back money. You fill out a form and Sequoia basically fronts you the money. Well, excuse me, but you can see how all of a sudden this can very quickly get out of control, because then where does Sequoia get that money? They'll have to borrow it.
Or liquidate some positions.
But the whole point is to not liquidate positions. This is what they said.
Yeah.
So my point is, I really think, and David said this before, I think a VC's job is to be a VC. It's hard enough to do that job well. And if you think that you're going to cascade across all asset classes and do better than the market, it's an extremely high bar that creates tremendous pressure and forces you to bring things on like debt and all of these leverage lines, which when markets go up will work in your favor, but can very quickly turn against you. Distribute and just hold on and use debt and give your LPs that want liquidity. What are you saying?
I said 2 or 3 times.
I'm not saying that. I'm saying
if Softbank did that, this would be a different position.
No, but like you're using Apple and Sequoia as an example. You do remember the trajectory of Apple basically went to a $4 billion market cap for years languishing. I mean, the idea that Sequoia would have held those shares because they had some proprietary view is ludicrous.
Why?
This company was on death's doorstep. You can see the YouTube videos. When Steve Jobs came back, he said, we may not make it. This is why I think that you have to define what game you want to play before you start playing the game.
Okay.
This is why I think it's kind of nonsensical. For example, I believe that at best, I am an equity investor in technology companies or things that have a technology bias, because I can generally understand them maybe, a few seconds faster than everybody else, which allows me to make a decision a little bit quicker. But if all of a sudden I started investing in debt, you should expect that I'll lose my money because I don't know what I'm doing. And that's not the game where I have any advantage. So I think the most important thing to do is to not try to do all of this crazy stuff, because this is what happens in moments where either things are very, very good or things are very, very bad. People try to create all these stupid rules. And their only rule is there are no rules. So I don't know. I just think it's like, stick to your knitting. If you're a product builder, build products. If you're an early stage investor, just do that. It's hard enough to do any one of those things really, really, really well. But this idea that, you're going to come up with like some mosaic in a system, I think it's just highly suspect. And I think the market returns have showed that everybody that tries has failed except for maybe one or two.
Zach, any thoughts on this?
It's just not going to work. What's the point? So I don't know. If you're an early stage investor, make good deals and then give the shares and book the win. So, 5 or 6 companies, maybe they can absorb even $600 million each. It still puts you at $3.5–4 billion. Doesn't put you at 20, which is what you need to put 100 into the ground in
$2 billion a month. I mean, my Lord, it's like Brewster's Millions or something. It's like some crazy premise.
I think in fairness to SoftBank, again, these are the same guys that invested in Yahoo. They invested in all of these, .com companies and brought them into Japan, including great businesses like Cisco. These guys have been big time serial winners. I think the tactical mistake was not having a 10-year investment life. I mean, it's important. It's part of a mosaic, and I don't really know. Look, what are we trying to get from this discussion? I don't understand. Like, are we trying to predict what's going to happen? I mean, I think David basically said it best. Like, if you actually just take a step back and stop overlaying what we want to happen. Look, the reality is all 4 of us want things to go up. And we like it when there's money in the system and everything's flush. But if we had said last year that we would open an envelope and, we would show these inflation prints, we would be shocked and we would have been scared. And quite honestly, in the process in November, when I started selling, I would have sold even more violently than I sold. And all I can say is I saved my ass in November of last year, looking at what's happened in the last 6-8 months. So I don't know. I just think that if you look at the CPI print and you look at the components, we were saved because energy basically fell off a cliff. And for whatever reason, a bunch of people decided not to travel, and we didn't import as much oil, and we were able to keep costs contained. And that kept CPI from being really out of control. But again, we're in the summer where we don't have the pressure on energy that we're going to have in October, November this year. So I really don't know. I mean, I just think that there is, like, Freeberg has his pet issue. I have my pet issue. Sachs has his pet issue. You ask 100 economists, they'll have their own pet issue, housing affordability, whatever it is. The point is, we have 100 whack-a-mole problems. And the question is, which mousetrap sets off the rest of the mousetraps? I have no idea. And so, I just think that right now things are a little bit too calm. And that makes me feel very unsettled. Been on that trend for 25 years. So maybe on the margins, a few folks run out of stimulus and decide to go and get a job. But I don't think, again, it's kind of like, when you're at the blackjack table in Vegas and
clapping as a strategy.
Clapping as a strategy. Is not a strategy. I feel like all what we're talking about right now is clapping as a strategy. maybe this can happen. Maybe that can happen. You know what? Maybe it'll start raining gold fucking coins that we can use. It made that impossible too, because Trump came out and he basically said, hey, listen, if these guys find something, it was planted. And now you're going to have at least 10 or 15% of the population that believes, okay, this was planted. It wasn't actually there. And, so whatever the outcome is, will not be good. Nobody will be satisfied. And both of the extremes in the United States will be even more angry.
Further inflamed, yeah.
Further inflamed.
Well, that's what I'm saying.
The inflammatory index has now skyrocketed, yeah.
By the way, this is why I think at some level, maybe the lack of faith in these institutions is well deserved, because where is the prudence of all of this? Like, where is the circumspect, thoughtful, methodical thinking about all of the different outcomes that could be possible, so that you exhaust every option and this is the only option left? And then even then, if Merrick Garland was open to basically saying, unseal the warrant, why didn't you do it before and say, we're going to have to serve this guy unless he actually gives us these things? There's all kinds of things you could have done.
Oh, clearly they did
hold on a second, to keep the temperature of this thing way, way down. And the motion, they start to make very poor decisions. I don't know whether the DOJ and Main Justice made a poor decision or not. I think this is where we have to hold our breath and hope they didn't. I don't know whether the White House knew anything or not. But the whole point of all of this is that we pulled this guy right back in to the main stage.